What is up, YouTube? Welcome back to Stacks by the Numbers, and today is Thursday. I wanted to do a quick update here. Markets were jumping up, then we started selling off. Now we're kind of rebounding here going into the close. T-minus about 40 minutes going before close, but I wanted to do a quick update on a few of our favorite stocks here that obviously we've been keeping an eye on. As we can see, this one in particular having a very nice day. Name of the company we're talking about, STEM Inc., ticker symbol STEM, listed here on the New York Stock Exchange. Now, if you've been following the channel, obviously, we initially found it, maybe it was like somewhere back here. The stock ran up to the 7s. And then as it sold off and kind of got back into this original range here, when it was in the 4s and even the high to mid 3s, really, I was saying that, in my opinion, this stock was still a buy. Right? And we were looking more for the longer term, talking about the backlogs and potential future revenue that's going to start coming in for the company over the following quarters, over the following years. And when we're talking with a situation like this, as I laid out to you, you are going to have to deal with some short-term volatility to eventually end up with that long-term growth. Now, again, as I say, you know, if we like it up at 4, we're going to love it down here at 3. So that's why when you see a situation like this, I understand it can be very risky and stressful, and it could be hard to tell when looking at a lot of your positions, which ones do I average down on, which ones are worth adding to, right? And a situation like this, fair enough, I can appreciate the fact that because estimates were jumping up so high over the next couple of quarters and years, and the fact that the company, again, came out this last quarter when we looked at them, and we can see that they missed on the top and bottom lines. So I can appreciate the fact if you were a little weary, a little hesitant here to add to the position as it started chunking down and making new lows. Because I'm sure to a lot of you, including myself, it may not have made complete 100% sense in that moment. Right? But as we see, obviously the markets have been raging, but as we see, STEM has been significantly rebounding here. Stock is up over 14% right now, sitting at 412, still up half a point here on the day. The market cap's now up to about 640 million. And again, as we see last year, based on annual revenue to market cap comparison, we could still say that the stock is significantly undervalued. But remember, the last time we looked at it, when they reported earnings, they spoke about, I believe, $1 billion plus on the backlog or something like that. So that's why when you have a situation like this, right, we had, in my opinion anyway, the way I was looking at it, I know we're all different. In my opinion, the way I was looking at it, I basically knew that the stock could have dropped all the way to $1. It didn't matter. If I had consistent income during that time frame, as I'm sure a lot of you do, if I had consistent income and I was in a place where, again, whatever it is, all of our financial situations are different. So some people, you know, could put $20 or $50 a week and they can, you know, slowly bring it into their investing account and build a portfolio. Other people, you know, you may be able to do 1,000, couple of thousand a week. Who knows? Everyone is different. But the point again is, because of that backlog, right, we come in here, this backlog, this was early November, and then we see it's like we had the initial pop on the backlog up to almost $4, and then we began selling off and chunking down and hitting these lows. So, in my opinion, like I say, if I liked it up here, I'm going to love it down here. And even though it seems scary, again, maybe a little bit of hindsight, but we can see that that was the right call. But again, $640 million market cap, brought in $360 million last year, just made $133 million plus $1 billion plus on the backlog. So that's why we can easily say the market cap could be $1 billion. And again, we all kind of come to our own conclusions and we all have our own ways, but in my opinion, that's kind of the way I was looking at it. So I can understand a pop like this. And also, we were down here, we spoke about this big trumpet when we first looked at it, right? And then we had the breakout above the top resistance line, so the stock continued even higher, got up to almost $8, and then we sold off, and as you see, I'll zoom in here, you can see the multiple bounces off of this line trying to stay above it, And then, of course, this is September going into October as markets were selling off. And you can see that it really didn't matter because people were just hitting the sell button. The short sellers were coming in and they were obviously running their trades to the downside as opposed to the upside. But now we can see that it looks like the stock not only found its bottom, but of course, based on these chunks up, Wall Street knows, in my opinion, that this stock is undervalued. And that's why I drew out a few of these trend lines here just to show you again. This is the purple line. This is the top going back to September 15th of 2022, connecting to the top, recent top of August 4th of this year, 2023, after we had our big run up there. So if we draw that trend line down, we can see, again, this is an estimate, but we can see around 540 could potentially be the next stop. And also, again, this was the trumpet that we were in, and you can see that we significantly rejected and dropped down to new lows. And then I know it's kind of difficult to say. I have a lot of drawings on these charts here, but stick with me. You can see how the stock immediately ran up not only to the fib, but right at that trend line. And then you can see it dropped down, but tried to retest, and then came back up to retest and rejected. And then obviously with the markets exploding starting yesterday, we can see that now we're potentially off to the races. So obviously the stock could either go up or down from this point. You don't really need me to tell you that. But if you're looking for specific levels, I would say right here, this 368 fib. Again, I'm looking at the 1 year. Looking at the 1 year, and we can see here 368 fib. In my opinion, that would be the level you would like to watch to the downside. Okay, because if you have a day where a candle potentially closes below that fib level, what the stock could then do is retest this blue trend line here. But again, chances are, I have a feeling that, it could hang out for 1, 2, 3 days. I mean, this is a big jump, especially in the last 2 days, right? The stock was at $3. Now it's at $4.11. So the stock literally just ran 33% in 2 days. You know what I'm saying? So if you wake up tomorrow and it's not at $5, like, come on, right? Let's be realistic. However, again, as we're learning, stocks only go up, and people are still talking about this supposed reverse market crash. So who knows? Stock could get to 540 tomorrow. I have no idea. But realistically speaking, it may calm down for a day or two. But in general, again, on the pullback, I would look for that level, because then technically it would be that next level. But I do have a feeling it actually continues momentum. But we'll switch over here to stock charts real quick, because I also wanted to hit you guys with a potential update on SoundHound. Did we have any news come out? Yes, for some reason, after coming in with $1 billion backlog, Morgan Stanley cuts the price target about a week ago down to 4 from 7, which is laughable because now the stock's already above 4. This is what I'm saying. Man, it makes me laugh, man. This is the easiest job in the world, is to be a stock analyst. I'm not talking about what I do or what some other people on YouTube do. It's actually more difficult. But I'm talking just being on the inside, being one of these analysts at one of these institutions. Man, you are talking about the easiest job in the world. You can be conservative with your price targets. It doesn't matter. You could look at a stock like Campbell's and give it an $80 price target. It doesn't matter. Something like STEM, as we said, $1 billion backlog, right? So we know, well, obviously we don't know. Nothing's guaranteed. But in my mind, I am highly convinced that this stock is easily going to get back up to, 6, 7, 8. So to give it a $4 price target is just laughable, especially after what they reported, again, this quarter, talking about their backlog. So whoever that is at Morgan Stanley should be embarrassed. And this is what I mean, again, not to go down that winding road of theories and whatnot, but this is why, in my opinion, I say that I just feel like a situation like this, they're just trying to suppress the stock so that they can build their own positions, because obviously, as we looked at everything, we can probably, most of us agree that $7 would actually even be conservative, especially over the longer term. Remember, these are longer term price targets, right? So they don't look at this like a lot of you guys do who are traders out there. You know what I'm saying? He's not expecting $7 in the next 3 months. So you understand what I'm saying? This is more of like a 12, 18, 24 month outlook here when they give these price targets. So that's why I'm bringing this to your attention, because the fact that it was lowered from 7, in my eyes, makes no sense to me. And to bring it as low as 4 also doesn't make any sense to me as well. You know, maybe 5.5 or 6, you want to split that difference, a little bit more understandable. But anyway, going off on a tangent. But yeah, so that in my eyes is BS. And of course, they talk about a large percent increase. So technically, we really don't have much news that came out in the stock. But again, we had a potential undervalued situation with an insane market pop the last day or two. So, you know, it's just adding more fuel to the fire here, so to speak. But looking over here at stock charts, we can see the RSI has been rallying upwards, and we can see it's sitting right here at about 64 1/3. And again, we can see that going all the way back here to about tail end of July, when we just about reached that 70 benchmark, we did begin to sell off. So, of course, this is not the main indicator to look at, but I always talk about the perfect storm, trying to look at all the fundamentals, all the technicals, and trying to kind of have them meet and intertwine and form the perfect storm of something that looks very attractive both fundamentally and technically as well. But as we see here, the RSI could continue to climb here on the daily. However, we have now climbed up and chunked up above the top Bollinger Band of 393. So even a pullback of 20 cents, which would be what, maybe about a 5% drop back to that top Bollinger Band for a day or two before it takes the next climb to 499, in my opinion, the 200-day moving average. Actually very understandable. The MACD obviously has been climbing very nicely since December. Switching over here to the weekly, we can see the RSI still below 50, so obviously over the longer run, we do have more room to grow. We have about less than 30 minutes now going into the close, and our mid-Bollinger Band is here at 422. We can see the stock hit 429 and then rejected. So I don't know if it necessarily rejected off of that mid-Bollinger Band. However, we can see that on the weekly, it has played with it on multiple occasions here. So this is what I mean. For like right now, to finish this week and even potentially going into the first half of next week, these weekly candles could be bouncing and rejecting and just kind of hanging out right at the mid-Bollinger Band. So again, that's another level to watch, 422 right here on the weekly. But we'll see what happens. And of course, with the recent chunks up the last couple of weeks, the MACD has crossed slightly to the upside there on the weekly. So this is what I'm saying. This is why it may calm down for a day or two, but I do have a feeling, in my opinion, that it does continue to keep going. But again, if you roll the dice with some options play and you have until like next Friday, and now you want to know like, oh, should I sell it on this pop or get a, like, let me tell you something, in my opinion, again. Regardless of what they're trying to show you in the market, you have to remember that the economy, especially here in the States, the economy has taken a massive hit. I don't give a crap what data they want to show us. The proof is in the pudding. Everyone is feeling the pain. So unless you are extremely well off financially in this country, you are probably kind of complaining and bitching a little bit as to what has been going on the last couple of years specifically. So this is why when they show us data, things like inflation is cooling and whatnot, yes, I can understand for the market, we may have an immediate short-term positive reaction. However, overall, again, simple logic and common sense tells us if you leave your house and you pay for things, goods and services are continuing to climb. Inflation certainly not cooling, in my opinion. So obviously, everyone kind of interprets some of this data in their own way. But again, I can appreciate the fact that after a 3-month sell-off with a little positivity, the markets have now been climbing for like the last 5-6 weeks. I can kind of understand that. However, again, just to remind you, there is usually the January effect, which takes place at the beginning of the new year's, which is when all of these funds and institutions reposition their capital and obviously put them into the more fundamentally sound, better growing, more longer-term plays that are going to continue growth for their hundreds of millions and billions in assets under management. So this is why I'm just a little hesitant because now you're telling me we rallied all of November and you're trying to say it was justified, but we're also going to continue to rally throughout December and you're going to try to tell me it's justified. But then in January, usually we rally because of the January effect. So now after a 3-month justified sell-off, in my opinion, it was justified and it shouldn't have stopped. But now you just completely reversed it, you turned it, and now you're supposedly going on a 3-month win streak now to bring stocks into new highs, and you're going to bring them to new highs before January even comes, and then you're also going to have the January effect. So, that's why I'm saying, I mean, there may be more growth and positivity to come in about the next 5 to 6 weeks, but man, I would be very, very hesitant to buy a lot of these stocks at a lot of their current valuations. Okay, that's just my opinion. Just trying to protect everyone out there the best I can. Again, nothing's guaranteed, but I try to do the best I can. So here, 416, right? I'm talking too much, but we got about 25 minutes left, and you can see, again, slowly approaching that mid-Bollinger Band. See, now it changed to 423. It was just 422. You see what I mean? That's why you got to stay updated on a lot of this info. But if it does get above that 422 mark, again, you could have that 499 on the daily. But, again, anything, only time will tell. If you're in options, in my opinion, again, this is a trader's market, uncertain market. I know I went off on a tangent, so now I'm going back to that point. But this is an uncertain trader's market. My rule personally for this type of environment is you have to be in and you have to be out. So if you several days ago bought like $5 calls or something on STEM, and then you just had a massive pump today, unless you have the time to deal with the pause and the hesitation before the next leg higher, then in my opinion, you should be in and out and you should secure profits because you just made a phenomenal call. Any of you traders out there, if you've been struggling maybe the last couple of months, on this channel, we talk about a lot of calls that we got right. Maybe some of your calls you got wrong, or you were late, or when it was a buy, you didn't have the capital. Then when you had the capital and bought it, it sold off, right? So any of you who've been getting screwed, if you recently stepped into this stock, like down here when it was sub 3, and now it's up here at 4, it's understandable if you want to take the money and run. Because again, like they say, no one ever went broke taking profits. So, unfortunately, to tell you exactly what is going to happen is a little difficult. But over the longer term, I'm still looking for $7, $8, $10, man, over the longer term. Not a doubt in my mind. Again, $1 billion on the backlog, which means we can easily double from this point here, bringing us up to like a $1.3 billion valuation, which again, conservatively would be about 8.25 a share. So, you guys know how I feel about this stock. And again, I know a lot of you are watching it and owning it or trying to own it when you have the money and catching it on a dip. So if this is a stock that has a lot of popularity and a lot of people are trying to get in here early at, single digit share price and hold it over time, this is why I try to come back to it, maybe like every couple of weeks or a month or so and give you guys an update. But STEM has been doing really well and had an explosive day today. So I figured let's throw out some positivity to the channel and, talk about a big mover here today. STEM, STEM Inc. Definitely, in my opinion, one to keep an eye on. And I'll end it there. Once again, Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for stopping by. Have a good day.